So SoFi, it's been a rough start to the year here, right? SoFi down 13+% here today. Just in the past 5 trading days, down like 17%. No bueno. So SoFi got downgraded by an analyst, and we'll speak about this analyst in just a moment, right? And so this analyst has doubts about if SoFi is going to be able to be profitable. He has doubts about their revenue capabilities. The analyst's view is that SoFi will generate only $2.3 billion in revenue this coming year, 10% below consensus forecast. He also believes EBITDA could be far weaker than where the rest of the analyst community is at on average, about 17% below estimates there. He says basically there's a lot more questions for SoFi than answers right now, right? And so there are more downside scenarios to this outcome than upside, right? That kind of sums up what this analyst believes. Now, in this analyst's calculations, SoFi's EBITDA will be about $80 million less than what investors are expecting for SoFi for this upcoming year. The good news, though, is that SoFi can still get very close to profitability this year, even if the analyst is right? Which would be a big step in the right direction, right? Now, this particular analyst has people concerned, right? And I saw Amit tweeted this last night, who covers a lot about SoFi. Here it is. He says, this guy has an average return of 15% on his calls, 64% success rating, generally more bullish versus bearish, only analyzes banks, called SoFi top in August and initiated a sell, has a price target of $6.50, implying a 30% downside for SoFi from here. That was as of yesterday, obviously. It's much closer to $6.50 than it was at this time yesterday, right? Now, if we look a little closer into this analyst, where do they rank out of the analysts ranked on tip ranks? They're number 354 out of 8,665. So this analyst does rank very high, very high. 914 out of 36,000 plus experts, as they call them. That matters. That matters significantly, right? If it's because sometimes we'll see these analysts make this call or that call, and they're so far off, and they're such bad analysts, and they rank really low. They'll be like the 6,900th best out of 8,000 plus analysts. To be the top 500, I think is, something that makes you say, okay, this analyst has to be paid attention to a little bit. And I believe this is why that stock was down so significantly today. 13% plus move is because of this analyst's success rating in the past, and him basically saying this baby's going to 650. People are like, I got a chance to get out at 8 or 9. Let me get out of this baby, right? Now, here's what I'll say about SoFi, okay? First off, if the company does get to actual profitability in 2024, it's a huge moment for the stock, because this has just been a money loser, and people just look at it as it's a money burner, and you can't, no one really wants to own. I know people will argue about this. It's not a bank. That's what people will say. It's a tech company. At the end of the day, people group this into being a bank, okay? Whether you want it to be a tech company or not, they're still going to group it into kind of being a bank. And so no one wants a bank that doesn't make money. Like, that's just like almost like oxymoronic, as they would say, oxymoronic. Like a bank that doesn't make a profit? How's that even possible, right? And so they need to get to profitability. They have to get to profitability. This is immense, not just for all public companies, but especially for a company that gets grouped into being a bank, right? Now, what I'll say here is if these analysts are right, and let's say the company's trading about 22 times 2026's expected numbers, then I actually got to say SoFi is a great buy in 2024, if that's accurate. Now, I don't have confidence to say if that's accurate or not, just to be quite frank with you guys, but if that is accurate, SoFi is actually a screaming buy in 2024. So, once I have a stronger conviction in terms of where I think profitability will be in regards to stock, I'll probably be able to start making a move in regards to SoFi. I'm just still trying to figure out what are my EPS projections, because right now I don't feel confident in any EPS projections personally at this moment in time. But like I said, if this is correct, then SoFi is a screaming buy throughout the year 2024, and every major dip in the stock will be a buying opportunity. So just a little food for thought. But once again, is that true? Are they going to really earn 40 plus cents next year? Okay. Next thing I want to let you guys know about is make sure you don't have money just sitting around not earning you interest right now. Okay. Collect interest. You savings accounts all over the place. SoFi, Barclays, CIT Bank, Discover, Ally, all these guys. are all pretty much offering 4% plus on a savings account right now. Some of them 4.5%, 4.6%. Collect interest right now, folks, okay? I don't know how much longer we're going to have of savings accounts yielding 4% plus. Maybe it's another 6 months, maybe it's 12 months, I don't know, but I'm just going to tell you in my lifetime, the only time period in my adult lifetime, which I'm 34 years old, and I know I probably look like I'm 18 right now. No, maybe not that young, but listen, this is the only time period in my adult lifetime that we've ever been able to get 4% plus on savings accounts. The only time period. And so take advantage of this time period. Make sure your money's not just sitting in a checking account or sitting under a mattress or something like that. Have your money make you money while it's just sitting there. The sideline money, the excess money, right? If you're not plugging into the market and it's just sitting there, get some interest on it, man. It's literally free money. It's like, would you rather have free money or not? I just actually explained to one of my children, my 9-year-old, that he could literally move his cash into his bank account and then into a savings account. And I ran the numbers with him, and I think he would earn I think it was like $14 a year, $16 a year. And he's like, oh man, that's like, 3 extra Pokemon card packs or something a year, right? It's phenomenal. So have your money make you some money, okay? If you're not going to use it right now, you're not plugging in the market, you're not buying a real estate property with it, have it generate you some money in that savings account, okay? Nike, just do it. Nike. I love Nike, okay? Stocks had a very volatile past 5 years. I'll put it like that. Very volatile. I mean, it's been a decent return of 40% over the past 5 years, but it's been very volatile, okay? I love Nike. It's such an easy ownable stock, I call it. If I think about easy ownable stocks I don't have to worry about, just sleep well at night type stocks, some of these stocks come to mind, right? Costco, Texas Roadhouse, Starbucks, Microsoft, Nike. Stocks like that come to mind when I think about easy stocks to just own. Like if your grandma said, hey, go buy some individual stocks, you're like, okay, I got to go buy some individual stocks. These are the type of stocks you think about. Like just easy stocks to own, right? Like I love these sorts of companies. And so Nike is in a very beautiful situation right now, okay? If you look at Nike's revenues over the years, it just goes up and up and up. Every once in a while, they have a pullback, and then they go right back to growth. A pullback, and then right back to growth, right? I mean, that's phenomenal. Growing from, less than $14 billion of revenue back here in '05 to now doing $50 billion plus in revenue nowadays. It's incredible, right? And a very consistent company. In terms of their net income, it can fall here and there, and then it comes right back. And then it will fall, and then it will come right back into new bigger numbers, right? And so recently, we kind of been in a fall period. I think over this next couple of years, you're going to see a massive comeback in profitability to whole new levels that you've never seen in regards to Nike, right? Nike controls one of the most valuable brands in the world. You can put it up there with the Apples and the Coca-Colas and the Amazons and the McDonald's and in all the most valuable brands you can possibly think of. Nike's right in there with those guys. Here they rank them the 9th most valuable global brand in the world for this past year, right? It's just that's special, right? And if I think, I took a peek at beside my bed, I have all my shoes I wear the most. So I'll have other shoes I don't wear that often in the closet, right? But in terms of next to my bed, I have, just certain shoes that I'm like, this is a high probability I wear these shoes every single week, right? And what do we find? Nike. These are like a basketball shoe, Kevin Durant. Nike, right? And then I got these shoes because I heard really good things about them. I think they're made by Xxxx as far as like for longer distance running. So I wear those usually once a week. And actually, this is a brand new pair. Actually, a private stock group member just sent me this past week to my P.O. box. It's an Adidas pair, which by the way is very comfortable. And so, all my most active shoes I wear, Nike, right? That's a phenomenal brand there. And I think that could be said for a lot of people out there. Now, a huge opportunity for Nike over the coming years is China and India, right? And so as more and more folks reach the middle class in China, reach the middle class in India, which, those markets are just dwarf the size of anywhere else in terms of population, right? More and more folks in the middle class is going to be more and more kids and adults are going to get into working out, into athletics, where, that just wasn't a thing. For a lot of Chinese citizens over the decades, that working out wasn't a thing. Like going to the gym wasn't a thing. And same thing with India, right? And getting in organized sports and things like that. That wasn't a thing in the past, right? But it's starting to become a thing. And if you think even about the United States, let's go back, let me take you back in time to the 1980s, for instance, right? In the 1980s, if you went to the gym, you were like a freak. They're like, what? You go to the gym? Like, you go lift weights? What? Like, that wasn't a thing like people did. Like, that was, you were weird if you went to the gym in the 1980s, right? And especially any time period before that. And nowadays, I bet you the majority of people watching this video right now, I bet you have a gym membership. The majority of people watching this video right now, I bet you have a gym membership. Now it's like the normal to like be in the gyms, right? So this is all bodes very well for companies that sell athletic type clothing like a Nike, right? Also, participation in sports varied by parents' education, right? And what you're going to find is the more educated parents are, the more likely they're going to have their children participate in sports as kids, right? Which that bodes very well for a company like Nike as well, right? It bodes well for other companies that sell into this product group. But keep in mind, the more educated people get in China, in India, the more likely they're going to have their children then enter into obviously sports of some kind, right? This is the numbers in the United States over the years, and obviously, I mean, it's crazy. Bachelor's degree or higher, almost 67+% of parents will have their kids 6 to 17 play some sort of organized sport. But that's incredible, right? Versus high school or less, all the way down there to 36%. Massive difference, right? Now, the U.S. opportunity is still massive. This is the size of the youth sports market worldwide in 2022 through 2030. But I mean, my gosh, just the United States is still a huge opportunity as well. Never mind on a worldwide basis, right? Now, no one can compete with Nike because they don't have the bankroll. They don't have the bankroll Nike has to buy up athletes and the top tier athletes or the top tier, let's call it musicians or whoever, right? Nike even does a lot of deals with some of the biggest musicians in the world. They actually have deals with Nike as well. It's incredible, right? But they're so smart about how they go about everything. This company is so ingrained into understanding things at such a higher level of chess than anybody else understands, right? You probably don't know who, I bet you most people watching this video right now, you have no clue who this is. Who I got on your screen right there, you're like, I don't know who that is. That's Sydney McLaughlin. And you would know her if you ever watched the Olympics. And I'm sure she'll be a superstar come this Olympics as well, right? And no one really probably pays attention to her unless you're really into track or you watch the Olympics. But you see her crossing the line, and you'll probably see her win again this year and probably break some new crazy record, right? And, what are the logos all on her that you're going to see and your mind's going to register as all that success as she crosses that line and breaks a new record and breaks her old records and all these things? You see these Nike symbols everywhere, right? And so you see that in your mind, whether you realize it or not, is basically kind of being like programmed of like thinking of success as somebody that is wearing Nike, right? Which makes you then want to go get Nike products because it makes you feel success, right? Now you might think, okay, so the Sydney McLaughlin, she's clearly got to be signed to Nike, right? Look at all these Nike symbols all over her. Well, no, she's actually signed to New Balance. But Nike's so smart that they basically have the rights, so all the U.S. athletes all have to wear these Nike symbols all over them, even though she's actually signed to New Balance. Isn't that phenomenal, right? Do you know who this is? I think a few more of you people might know who this is right here. His name's Steph Curry, one of the greatest basketball players ever. What a shooter, right? Arguably the greatest shooter in the history of basketball. And every time this man goes to the NBA Finals, wins another championship, wins a game, breaks another record, you see all these Nike symbols all over him, right? Nike, Nike, Nike. And so you think, oh man, this, once again, your brain subliminally putting together the success with the Nike, and you might think a guy like this is signed to Nike. No, he's not. He's actually signed to Under Armour for a massive deal. But what does everybody associate him with? Well, if Nike symbols are all over his uniform, they're associating Steph Curry with Nike, not with Under Armour. So he's got this big Under Armour deal, but unless you really know the details, you wouldn't even know the man signed to Under Armour. You think he's a Nike athlete based upon the fact that every time he goes to shoot a shot, he's got Nike symbols all over him. Isn't it amazing? This is a company that plays at a higher level, and they got a bigger bankroll than anybody else can even participate with, right? Now, if we go ahead and look at this company's EPS expected for next year, analysts, and when I'm saying next year, I'm really talking about 2025 fiscal year, because their fiscal year ends weird for Nike. It ends in the middle of the year, around May. So I'm really looking at 25 fiscal year numbers, right, which would be this coming May through the next May. Analysts have been doing 426. They have it at about 25 forward P on this stock. I think the number's way low. I think they're going to do way more than that EPS there. And one of the main reasons is Nike just announced here about a week ago or so is that they're going to do about a $2 billion cost-cutting plan over the next year or two. And so you're going to see Nike's EPS, I think, skyrocket in quite a substantial way, starting in the back half of 2024 and moving into 2025. So I think this number is way too low. And when I say way too low, I mean way, way too low. I think they're going to be way more profitable than that. Now, on top of that, if we look at this latest quarterly results, there was a lot to like there. Gross margins increased 170 basis points for the company, which is a fancy way of saying 1.7 percentage points, which is good in this environment, I can tell you that much. Inventories for Nike were $8 billion. That's down 14% compared to a year prior. That's good. That's definitely good. We don't want to see Nike bloated with inventory. Cash and cash equivalents and short-term investments were $9.9 billion. Great money on that balance sheet, right? Those are some very positive things. Now, over the past 10 years, Nike's returned a little less than 180%. I honestly think that's probably how the next 10 years will go. I think it'll probably be 100% to 200% type return in the stock over the next 10 years. Now, in terms of Nike, how many shares could I own this one? How big could I go? It's unlimited. I don't even have like a number of like, there's a lot of stocks like an Alibaba, for instance, or other stocks that I'm like, I have to cap this stock at a certain sizing because, I don't want to go too heavy because it's a little bit risky. Nike, I'd feel comfortable. I could have $1 million in Nike and I'd feel comfortable. There's no amount of money that I wouldn't feel comfortable having in a stock like Nike. And that's one of the few companies I can say in the world that I feel like that, right? So I can go way bigger. And so don't be surprised if you see me pick up a ton of Nike shares in 2024. Nike's next one up here. I'm really excited about Nike. So I have a little starter position in Nike, but it's like, let's call it meaningless position right now. I want to build it to be a very meaningful position by this time next year. Now, I would love to buy the stock heavy, and it's another sleep well at night type stock. I'm not going to have to stress about this stock. It's, the performance hasn't been very good over the past 5 years. 40% for Nike is pretty bad. And right now they're in a downgrade cycle from Wall Street, right? Wall Street was not happy with the short-term numbers in regards to Nike, their short-term guidance. So you see all these guys here today. Jefferies lowered their price target to 110 from 120. These guys, they lowered the price target from 142 or to 142 from 127. Wow, they increased their price target? That's rare. Almost everybody on Wall Street, I automatically assumed that one was down too, because literally almost everybody on Wall Street has gotten very bearish on Netflix. And almost no wonder I never remember hearing about these guys. Fubo? What is this, Fubo? Fubo Securities? Here's the deal, okay? Nike's sales outlook was very disappointing. 1% growth. That's horrible, right, for Nike. And so that's what got everybody very pessimistic on the stock. Could be sandbagging. That's something to keep in mind. But what was impactful to me is they got a cost-cutting plan to go in that's going to save $2 billion, up to $2 billion roughly. So let's just call it $1 to $2 billion. For a business model like Nike, that's substantial. $1 to $2 billion in savings, that's huge for this company, right? Now keep in mind, the last 18 months has been brutal in terms of consumer sentiment. If you look at the United States, Michigan consumer sentiment, the last 18 months has been about the most brutal we've ever seen in history, including the worst numbers we've ever seen in history in 2022. Now, Nike sells to the masses. So if people are being sliced and diced by inflation and they're feeling horrible, they're not going to go out there and buy as many Nikes. They're not going to go out there and buy the new pair of Jordans. They're not going to go out. Just either they can't do it or they don't want to do it, right? And honestly, for most folks over the past, that are, a lot of Nike's customer base is middle class or even below middle class. A lot of folks just haven't been able to be in the financial position because they got sliced and diced by inflation so bad, right? And inflation is no longer an issue for at least 2024, which is going to mean consumer sentiment numbers could likely improve dramatically in 2024. And with that will likely improve Nike's revenues in a substantial way, as well as pricing power as well, right? Now, when it comes to Nike, I think, so Nike's fiscal year ends in a weird time, by the way. It ends in May of each year. So based upon, we got to look at the May 2025 numbers, really. Analysts had them at 25 times, forward P right now. I think Nike's actually trading at about 15 to 20. And the reason being is I don't think analysts have properly priced in the $1 to $2 billion of cost savings plus a consumer sentiment that, let's say, gets substantially better over this next 12 months than it's been over the last 18 months, right? And so for that reason, I believe Nike's actually trading at about a 15 to 20 times the May 2025 fiscal ending period there, which is actually very cheap for a stock like Nike, right? Very cheap. If I'm paying about 15 times, I think the company could do $5 plus in EPS in 2025. $5 plus, if not closer to $6, right? So there's just a big divergence between what analysts think are going to happen here with Nike over the next year or so and what I think, right? And keep in mind, they're going to, with all the cost savings, they're probably going to take some one-time hits that hits them over the next quarter or two. As a long-term investor, I'm thinking years out with these companies. I'm not thinking about the next quarter. Next quarter means nothing to me. I'm thinking about where's Nike at 3 years from now, 5 years from now, 7 years from now, right? And I like what I see in regards to this one, right?